Seeing some promising news for Aussie homeowners now. The latest inflation figures signal a post-election rate cut likely on the way. The Reserve Bank's preferred measure of underlying inflation has dipped below 3% for the first time in 3 years. Now sits within the target band. But while the data is a touch higher than market expectations, the only real question is how much will rates be slashed by? For more, economist Evan Lucas joins us live. Good morning. Is an interest rate cut all but locked in?
Morning, Nat. I think it is. Probably your question is when. Is it the May one? It looks pretty likely. The market now is pricing a 96% probability that we will get a cut in 20 days' time. But that cut looks like being about 0.2 of 1% rather than a big shock and awe one of half of 1%.
OK, so that's good if you have a mortgage. What if you are living on interest rates?
So it's the same principle. Those that is good for mortgages, as you just pointed out, now it's not necessarily as good for those that are using interest rates as a form of income. So if it's to fall by what we expect by the end of this year, which is a full 1%, so not just what's happening on the 20th of May, if you have got $100,000 in a term deposit, that means you're going to lose roughly about $1,000 per annum in terms of that space. So it's not good for everyone. And I do need to also point out, you've also got to take in it's still that inflation figure. So at 3%, which would be where it would be by Christmas rather than the average of 4%, you're realistically just staying above inflation if it holds at about 2.7 to 2.9%.
Do you think this will have much of an influence on the election?
History shows no. Nat, and I think that needs to be put. None of that. We are so close to it. Most people have already seen early voting. We are at record levels. So I don't think so. Plus, it's not locked in yet, right? So we've still got to wait to the 20th of May to make sure of it. It will be talked about by the government for sure. They will very, very strongly talk about the fact that they have cured inflation. That's not true. It's still growing at 2.9%. It's falling, but we still have an annual inflation rate on a core basis at 2.9%. And historically, that is still high of the last 15 years. OK,
well, the Treasurer was celebrating yesterday, saying this is what we aimed for, under 3%. We've delivered this, and we could have 4 to 5 cuts in the next year.
Yep. And again, he will absolutely and has the right to say that. There was a very clear chart, though, in the ABS data yesterday of the CPI that actually pulls out energy. And it showed very clearly what the inflation rate of energy with the rebates in there and without. And it's very clear that that government intervention has certainly brought it down now, but it's going to pop up probably about 15 to 20% in inflation rate at the Christmas period when that rolls out. That's his problem going forward, is that the policies they've used have worked for now. They're not going to hold that energy issue into the future once that rolls off in December. Unless he extends the rebate. OK, Evan, thank you very much for updating us.